So the Celsius issue continues to worsen. They're hanging on by a thread, but have we finally figured out who has coordinated attack against Celsius? Who is to blame here? What is going on? Let's try to get to the bottom of this and try to figure out, are your funds at risk and what should we have seen coming? Make sure you smash up the like button. Don't forget to subscribe. As always, this video is brought to you by NordVPN. Check out the link in the description to make sure you're staying safe in crypto. That is the theme of this video. We need to make sure we are staying safe in crypto. And as some of you guys will know, who, if you've been following me, the biggest frustration I've had over the last 6 to 7 weeks is the fact that crypto as a whole was created to be this alternative to TradFi, right? We want it to be better. We want it to be different. But the reality is we've come a full circle. We are no better, and arguably I'm going to show you here how we've become worse, right? And that's really, really frustrating, because if you're part of this mission, making money is one thing, but if you're part of this mission to do something different, and I grew up through the whole Bear Stearns, Lehman Brothers situation, I saw the 2008 financial crisis, and I was in TradFi at the time. So for me, it resonates particularly closely, but to see that crypto has just come back a full circle, and if not worse, is really, really frustrating. So I'm going to be covering this off as thoroughly as I can to show you kind of what are the pros, what are the cons, where have there been coordinated attacks, but also where have there been failings on Celsius' part, and let's try to make an impartial view of what's going on. So the traditional narrative up until this point, and we'll cover this off as well, is that Celsius has became too risky, right? So to give you a bit of a background around what happened with Celsius. Celsius initially, going back a couple of years, 2020, they would always lend to institutional traders, okay? So in other words, you'd deposit your money, they promise you some yield, which is some crazy yield, and by the way, you know, like I always tell you, if it's too good to be true, most chances are it is. But they'll promise you this crazy yield, so you leave your collateral in. They would then go lend that to institutional traders who would then make trades, who would do arbitrage, do various different things to make a return, and Celsius would therefore make a profit on the collateral that you have posted. Now, even though I despise this practice and I hate this practice from TradFi, I can admit, and you guys will know if you're in TradFi, that this is a common occurrence. And Alex himself, the CEO of Celsius, Alex Mahinsky, he came out and said that we're just a DeFi version of what happens in TradFi. Okay, fine. Now, I still don't like that because, again, we should be better. We shouldn't be even doing the practices that they do. And this is one of those malpractices which I don't like from TradFi, which we should have been better at in DeFi. But no, he claimed that, okay, we're doing the same thing as TradFi. Fine. But then, progressively, he became more and more degen. And that's part of the issue here, right? Is that was initially one way he was doing it, but then eventually, Celsius started to play DeFi themselves. And if you look at the DeFi games they were playing themselves, that led to all the various failures which we've spoken about in our previous videos. Whether it was them losing 35,000 ETH in Stakehound, right? Who Stakehound said they misplaced the keys. Whether they lost $22 million in the Badger DAO attack. Whether they just about escaped from Luna. Whether they now with the issue with staked ETH in Lido, and then the issues they had with Curve as well. These were all DeFi plays that Celsius themselves placed your funds at risk by investing them into DeFi themselves, which is as degen as you can get for such a huge project. And it was clear they were not doing enough due diligence. They were not investing it in safe DeFi plays, because pretty much, for you to have 5-6 failures from the ones you've picked, I mean, the writing was on the door a long time ago for you, Celsius. You were picking bad plays. It's not like it was your first mistake was Luna and you died because of that. This was multiple DeFi mistakes, from staked ETH to Luna to Badger DAO attack to Stakehound to everything you were picking was turning pretty bad at this point. So the question now for us is this was Luna the Bear Stearns moment from traditional finance, and is now Celsius going to be the Lehman Brothers, which really then send us onto a contagion effect affecting many of the projects? And my view is this well could be. When Luna really did start to spiral out of control, I would say publicly to you guys that don't think this is the last one. Don't think that this is the last company to capitulate right now, because that's not the case, okay? The reality is when markets are depressed, that is when you see what a company is truly about. It's easy to run in a bull market. I mean, let me put this into perspective. Let me share this with you. Let's take a look at this, and I'm going to show you this one here. So since the Luna attack, you'll be able to see these are the outflows of Celsius. So Celsius for the last 6 weeks have had more outflows than they've had inflows. You can see everything is out. And when a company, I mean, just it's obvious when you look at it like this, right? If a company or a project cannot function simply because of a period of more outflows than inflows, that is a sign of a Ponzi, okay? That is a sign, it's a red flag for a Ponzi. A company should be able to cope a certain period of time when things aren't going their way. If suddenly when things aren't going their way, i.e. in this case, less money is coming in than going out, and the company just is done, finished, we're out of it, then there's a problem, right? You should be able to function for a period. Now, if there's a crazy, 10 sigma event and it's a one-off situation, then fine. But this is a bear market. If you're in crypto, you know this. Alex Mahinsky knows this. And this is a worrying sign for a project when this happens. Now, arguably, in terms of pausing withdrawals, I don't think that's the worst case. I think that's probably the right thing for him to do. Now, it's really annoying for customers. It's unacceptable. It's completely unacceptable. It removes their right of access to their funds. But I guess when we look at the Luna situation and Do Kwon doing very little, at least he paused it and he's trying to come up with a rescue plan. Whether he's able to, we will find out. But this is where things get interesting. Because speaking of the Luna issue, Plan C posted a really good thread here, which kind of pieces together some of what's going on behind the scenes. And I'm not going to read through this tweet to give, Alex Mahinsky a pass, because I want to come on to some of the reasons why he doesn't need a pass. But first, let's get this to get a balanced view of what's going on. When the UST depeg started, there was a plan to make a deal with Luna and save the peg. If a lot of you guys remember this, we covered this off. There was this plan that some of these guys were getting together, okay? So you could see here that this was a plan that was tweeted at the time. Jump Capital, Celsius, Jane Street have already committed. Alameda not yet, and they're looking to raise 1 billion to 1.5 billion to save Luna at the time. And then what you noticed was Do Kwon tweeted, close to announcing a recovery plan for UST, hang tight. And you could see there was a plan kind of emerging. But then Alex Mahinsky, who is the CEO and founder of Celsius, came out and said, nope, for the avoidance of doubt, Celsius Network was not and is not involved in any Luna bailout. Motive, blame, lost funds, okay? So you can see here that what happened then, Celsius got out of the door first, suffered the lowest losses, and didn't want any part of the bailout. Stuck holding the UST and locked Luna bags, losing hundreds of millions of dollars each. That's FTX, 3 Hours Capital, which we covered off in yesterday's video. Make sure you go watch that to understand what is going on with 3 Hours Capital, Galaxy Digital, and Jump Capital. In other words, Celsius, which we've just covered off, made another horrible DeFi play, right? Being a degen, trading users' funds, your funds, rehypothecating, which is again one of the common threads we need to lose from TradFi. We can't bring over all the malpractices of TradFi and continue doing them in our industry. We're not going to make it anywhere. We're not going to progress, because the reality is you can fall much harder in traditional finance because you don't have government backing. Where traditional finance gets away with over-leveraging, rehypothecating, it's because the government intervenes and saves them. We've seen that with financial crises in the past. But if we copy them with decentralized, we will fall much harder. We'll continue to wreck people time and time again, and crypto will be over. Right? I don't want to sound sadistic, but it will be over because you don't have government support. So you cannot bring on the malpractices of traditional finance. So it seems here by Celsius then figuring out, oh, we made a horrible degen play and quickly tried to press the emergency exit, leaving the front running these guys. They made a whole bunch of enemies. And these are not guys you want to make enemies of. I mean, Alameda, Sam Bankman-Fried over FTX, powerful guy, 3 Hours Capital, one of the biggest crypto hedge funds, Galaxy Digital, Jump Capital. You can't annoy bigger players than this. And then we can continue and you can say, okay, maybe you then, and the whole thread pretty much goes on to say, okay, maybe you've just, got them pretty annoyed and they come back after you, right? And they set out on their vengeance mission to plunge Celsius. So it's an interesting article and it's worth kind of having a read through this. This is the real Plan C on Twitter. But I don't want this to be a reason to then deflect off of what's going on with Celsius, because it's very important that we don't. If you're any big project, whether in traditional finance, whether in this crypto space we're in right now, you need to be prepared at that size for coordinated attacks. And we've covered this off plenty on this channel, right? During the Luna saga, we spoke about the run by George Soros on the Bank of England. If anybody's operating at these sizes, you need to be prepared for coordinated attacks. And the way you are prepared is by having sound fundamentals in how your project is built. And clearly, Alex Mahinsky did not have this. Celsius did not have this. They were making too many degenerative plays, which make them a very valid target for a coordinated attack, just like Luna. The fact that someone has attacked you in a coordinated fashion doesn't mean that you avoid of all responsibility, right? That's not what happens. Okay, so let's now take a look at another interesting angle, which is, was there now a pattern of deception from Alex Mashinsky? So this is very interesting, where you had various bits of information now coming out saying things were pretty obvious in that Alex wasn't the most trustworthy character. This is another thing for us as investors and people who, because the reality is, whether I tell you not to or not, people are putting their life savings in things like Anchor Protocol on Luna and in Celsius as well. And I wouldn't understand why people do that just to chase crazy yields. But the reality is, if you're going to do such a thing, at least look into the project, at least look into the founder's previous projects and claims. So we'll run through these, whether these are true or not. I mean, these will need to be fact checked, but it gives you an understanding of the other side of the story as well. So claim, Alex Mashinsky invented VoIP. False. His name is never mentioned in histories about VoIP, and his VoIP company, BYBIT, focused on bandwidth trading over providing VoIP services. Okay, so that's the first claim. Claim, the IPO of his first company, BYBIT, was the most successful of 2004. False. BYBIT spiked on its first day of trading, rapidly declined in value, and was eventually sold for pennies on the dollar. As far as I can tell, the company was never profitable. Also, Mashinsky had been forced out of BYBIT by other investors well before the IPO due to his erratic and unfocused behavior as CEO. Claim, Mashinsky invented the foundations of cloud computing with his firm Ellematics. False. Ellematics was another failure that disappeared without a trace. Mashinsky himself doesn't remember what happened to the company. Claim, Mashinsky generated $3 billion in exits during his career. False, this number requires very liberal valuations for his previous firm and includes a full market cap of BYBIT at its peak well after he had left the company. Okay, and we can go on and go on. Mashinsky claim Mashinsky invented Uber before Uber existed. False. Mashinsky created GroundLink, a taxi service in NY with a website. He apparently lost control of the company due to insolvency in 2010. So we can keep going through this, and there's a whole bunch of claims and an attempt on the character, right? And the point I wanted to make here by sharing this is it's really important that we do this when investing huge amounts in a project like Celsius or Anchor Protocols. I mean, some of you guys are putting your life savings on these platforms. The least you should be doing is doing a bit of a background check on previous projects the person's run, look into it, understand it. And this should be a big reality check for all of you guys. Go look at where your money is sitting right now, whether in crypto or otherwise. And if you don't understand what is happening with that money, take that money out. You should understand clearly what is happening with your money, because this rehypothecation problem is a huge problem, okay? And you need to understand that. And that's one of my risks around stable coins, is we don't have the transparency of where some of these coins are going. And therefore, if ever there is a run on any of these stable coins, whether it's Tether, whether it's UST like we saw happen, this is the issue you have. When there is a run in a bear market, these companies get exposed. And trust me, the contagion effect is going to be broad. If something happens now, to Celsius, and then something happens to 3 Hours Capital, do you think that's going to be it? No, these are all entangled, right? There are tentacles everywhere. 3 Hours Capital have tentacles in all the major projects. Celsius have tentacles in all the major projects. Do you suddenly think other projects won't start feeling it? Of course they will. And that's why you have to be careful here. Okay, so the issue here with looking at this, let's just see what else I want to cover off. This was the other piece I wanted to cover off as well, actually. So sometimes there is no smoke without fire. And this article dates back to June 2021. So almost a full year ago now, Custodian Prime Trust cuts ties with crypto lender Celsius. And if you go down, you can see that what they say here is we've terminated our partnership with Celsius Network for a variety of business factors. The relationship lasted just over 12 months. We won't comment beyond that other than to wish Celsius well in its endeavors. Okay, so they went ahead and stopped their ties, but the reality is they were concerned about endlessly rehypothecating assets. And this is always the issue, guys. And you can see this is actually their demise. So 1 year ago, people were calling this out, and it's important that we heed this stuff. And the reality is, unfortunately, in this crypto space, just like we saw with Do Kwon and Luna, when somebody does come out to call out a project, we often dismiss it, and we often listen too quickly to the soothsayers, right? The smooth talk, the sales pitch from the founders, instead of actually going into it and looking into it and saying, hang on a second, maybe this, maybe this thread on Twitter or this piece of research is actually pointing to something right, which I should dig into, instead of just dismissing it because I think Do Kwon is a cool character, or I think Alex Mashinsky is a cool character, or even worse, because I'm putting my head in the sand and just hoping everything is going to be all right. That's not okay. If you want to be a serious investor and you want to put serious funds into crypto, you've got to take the responsibility to say, I've done my due diligence, I've done my research, I understand what's happening with my funds, and it's a risk I'm willing to take for the percentage return that I'm willing to gain. You guys know my view. Leverage, rehypothecation, margin trading, misallocation, these are all common trends from TradFi that we've learned over many, many years, and we should not be making those same mistakes. So look, this is not about grave dancing. This is not about wishing for the demise of Celsius. I truly hope that pausing withdrawals allows them to go get the liquidity, allows them to go get the funds to make everybody whole again. Because the reality is, I couldn't care less about Celsius or their founders, but I care about the people who have lost their funds in Luna, who will maybe lose their funds in Celsius and any other project going forward. So the message here is just, we need to be responsible. We need to be responsible in the plays we invest in and where we allocate our funds, and we can start making the change that we want to see in the crypto community. As always, guys, stay safe in crypto. Get yourself set up with a VPN at the very least. Link below to NordVPN to get yourself 2 years of NordVPN for like $2 a month or something crazy like that. So get yourself set up. Absolute no-brainer to at least protect your online addresses, so nobody can track or trace which country you're coming from. Thanks for watching this video, guys. I'm going to link up the video from yesterday, so go watch that video explaining what's going on with 3 Arrows Capital, and I'll see you in the next one.